Warning, I would not call bottoms emphatically. So we've had 7 out of 10 weeks be red, 8 for the small caps. There's no way of putting it other than the bears are in charge. We are selling rallies. Today is 4/20 and we are forecasting the coming week. The plan for the bears is to short rallies against resistance. I will be very, very careful there. As far as the bulls are concerned, I will stay in defensive mode. So if I have bullish positions that are under fire and I get a relief rally, say in Netflix's example, I would use that rally to get out of my problems. So last week was red, but there were some signs of stabilization, especially in the fact that the VIX broke 30, below 30 a couple of times. And also the small caps were green. That's a basket of 2,000 stocks. So maybe the weakness was concentrated in the mega caps, and this week they could shrug that off. We will start with Tesla and Google, the two highest profile stocks that I can think of off the top of my head. The best thing that can happen for the bulls this week is if we continue stabilizing. The one sign of stabilization is the VIX. The level of the VIX needs to drop because it represents how nervous the market makers are. That would be a good sign. Also, if bids come back into stocks like Meta and crypto. So if they are catching a bid, then maybe the risk appetite is coming back. Warning, the bottom is a process, just like it was on the top. If you remember, I called a topping formation. I never called a top. Here's a snapshot of what's going on this week. For this week, I highlighted already Alphabet stock and Tesla. Tesla's Tuesday. And then you can throw in there IBM and Intel. What we don't want, big blanket warning signs on throughput, like availability of supplies or some restrictions on inventory. And we'll put mathematical downside pressure on the QQQ, for example. Let's talk levels. We'll start with the SPX. Again, 7 red weeks out of 10. I'll put my lines on there. I want you to focus on 2 giant boxes. They're hard to miss. Those are what we're stuck in. For as long as we're stuck inside those, the edges of those boxes, like the top third and the lower third of each of those boxes, are support and are resistance and support. If you lose the red one, we're opening the door for another 10% at least correction. An area of interest would be around 5,100 to 5050. Conversely, the 5400 area, 5470 and 5570 are of interest on the SPX on the way up. Every line above, like this collection of blue lines above, these are older scars, I call them, older fight zones that have now become resistance because they're on top of us. I bring you the QQQ levels, again, the 2 boxes, and here I definitely put the lines on the chart. But for now, we have an immediate line to hold at 436. If we lose that, we might come down to the 424, where we will find some support. Another area of support is around 412. On the upside, as we rally, I think we will find a lot of resistance into 464. If we get to 475, I would exit my longs if I was a trader. It would expect some pretty harsh resistance there. Here we have the small caps, which had a good week, relatively speaking. The 4-9 range limits are about 192, so I would expect sellers to show up there. And another area of resistance would be around the 198 to 200. And of course, the April correction was all the way up to 206. Meanwhile, if you look down, it has already hit all of my purple arrows almost exactly. Now the forward warning is I can draw these same arrows starting from 170. So if we lose 169, we will open up another trap door that is $25 to $35 of downside from there. And here's another thought. Will we have this rotation out of this bunch into the QQQ? I want to make a higher time frame comment on levels. If you look left, this is a longer time frame chart for the small caps. And if you look at where we are, or at least the lows we just placed, match up with the pandemic start and breakout. And also, if you look back further to the start of the correction of 2018, that was when Powell at the time was ratcheting rates, I believe, and Trump was pushing him to cut rates, and then he finally capitulated in Christmas to restart a QE from there. Look at the SPX. It is nowhere near that. I believe they are still 30% above these levels, and the QQQ is 40%. and the NASDAQ. So I'm going to show you the QQQ and speak a little bit wonkiness of charts. This red pattern that you see on my screen, this chart is still bearish, and we've only barely accomplished target 1 of 2. I hate to leave you with a spooky scenario, but that's what we have, and that's what we're playing with. Stay grounded, and bulls use rallies to fix problems, not to add to your problems. And bears, you can short against resistance, not just blindly across the board. And also start to nibble longs, because there are some excellent stocks that have hit the support zones. I will be in the live room every day this week. Join us. It's been an amazing place to be.